Hello and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Wednesday, October 7th, 2020, and I am pre-recording this Trading Places Live for Thursday, October 8th. Futures currently are up slightly in after-hours action. We'll see if that continues into Thursday morning's action. The market was pretty strong on Wednesday, so we'll see whether or not that we see if we have a follow-through day on Thursday. But at least for now, futures are slightly higher. I'm going to get into a few things here. Let me go through the agenda with you for today. I'm going to start off with the daily market recap. I'm going to go into in the news, talking technically, relative strength, chart lists, earnings spotlight, and we will wrap up the show with the three you must see. But before I get into any of that, I do want to point everyone over to earningsbeats.com. If you look on our main page there, you'll see we've got the Earnings Beats Digest newsletter. It's a free newsletter, open to everyone. Love to have you join. We do publish on Mondays, Wednesdays, and Fridays in the morning, typically before the market opens. If you would like to receive it, you can simply type in your name, email address, hit the subscribe button. There is no credit card required, and you can unsubscribe at any time. But this is a great newsletter to learn a little bit more about how we approach the stock market. We look a lot at relative strength, at earnings. We look at certain industry groups. We take a look at the overall market. A lot of different angles, but I think our approach is proven. If you look over to the right-hand side, you'll see our 4 portfolios, which are based on many of these same principles. And you can see that our results since inception in each of our 4 portfolios very strong. Our model portfolio, which is our flagship, now up. It was a big day on Wednesday for the model portfolio. Actually, for all of our portfolios, I think strong AD portfolio had the best day. But we're now up 162.5% in less than 2 years. And the S&P 500 over the same period up 27%. So it's been a nice run overall. Obviously, we've been through some rough periods, including the pandemic earlier here in 2020. But overall, 27% over a 2-year period, or just under a 2-year period. That's pretty strong. And like I said, our model portfolio up 162.5% over that same period. Check out the quarterly returns since August 19th. So our quarters start February 19th, May 19th, August 19th, and November 19th. And you can see since August 19th, model portfolio up 15.5%, S&P 500 up 1.3%. And looking across all of our portfolios this quarter, every one of them beating the S&P 500. Strong AD portfolio now up almost 18% this quarter since August 19th. Well above that 1.3% on the S&P 500. So anyhow, if you'd like to learn a little bit more about what we do have a essentially a no-cost 30-day trial. You sign up, you're charged $7, but we refund you that in the first week or so. So there's no cost for 30 days, and then you can kind of figure out whether or not this is for you. I think you'll enjoy it. All right, let's move on. Take a look at what happened on Wednesday. Dow Jones Industrial Average up 1.91%, S&P 1.74%, the NASDAQ 1.88%, mid caps 1.77%, and small caps 1.48%. Pretty big across the board move. You can see that the mid caps actually breaking out to a new closing high. That was very bullish and significant from a technical perspective. NASDAQ, which has been pulling back, starting to rally again. This has been our leader in 2020. I see, now I'm not going to say blue skies ahead. We've got some overhead resistance we have to deal with, but I do think the market's heading higher, and I think we're going to be challenging that overhead resistance sooner rather than later. As far as our sectors go, leadership, strength was across the board. All 11 sectors finished higher on Wednesday. But from a relative strength standpoint, our 3 leading groups were materials, consumer discretionary, and industrials. And industrials in particular, looking to break out above that 80 level, closed at 79.62. This is a group that includes transports, which have been very strong of late. Transportation stocks moving higher. I think that really bodes well for equities, U.S. equities in the balance of the fourth quarter. Renewable energy. I don't know if this is unprecedented or not. There are 104 industry groups. Renewable energy has been the number one industry group for 3 straight days. Not number 2, not number 3. Number 1. It has been number 1 for 3 straight days. Money is pouring into renewable energy stocks as we head into earnings season. I think that bodes very well for these companies that will be reporting earnings. One of the stocks that we own, actually in our model portfolio, we own SolarEdge, SEDG. That's one of our 10 equal weighted stocks, and SolarEdge has been on absolute fire, as have many of the stocks in this group. But renewable energy continue to be strong, making that breakout on Wednesday. We'll see if that continues on Thursday. Weakness for the second time in the last 3 days, gambling stocks have been the worst group. So we got renewable energy going up on the one hand, we got gambling stocks going down on the other. I still think we're in a nice uptrend. I certainly wouldn't write off gambling stocks, but when you're looking at on a relative basis, I mean, look where we were back at the beginning of June. Probably 725 or so in the gambling index. Right now we're at 671. So even though the lows keep moving higher, we really haven't done much the last few months. Take a look at the NASDAQ, where we were back in June. Back at this high, we were at 10,000. NASDAQ's now 11,300. That's 13 percentage points higher than we were back in June. Gambling stocks are down over that same period. So that's what we constantly talk about and stress is relative strength, or in the case of gambling stocks, relative weakness. I don't care that it's been putting in higher lows over the past several months. The real fact of the matter here is that gambling stocks on a relative basis are underperforming, and that's enough to keep me out of the group. The 10-year Treasury yield. We do have one economic report due out on Thursday, and that is initial jobless claims. Of course, they come out every Thursday. The expectation is for initial jobless claims to come in around 819,000. Last week, it was 837,000. So we are looking for improvement, but it has been very stubborn here the last several weeks in this 800,000 to 900,000 range. A breakout, though, or excuse me, in this case, a breakdown, I think would be very bullish for our economy, and I think could lead to the 10-year Treasury yield continuing its recent spike. We've seen over the last 6 days now, the 10-year Treasury yield move from 0.65% up to 0.785, or rounded 0.79 on the close on Wednesday. So this push to the upside is telling us that money is rotating out of treasuries. With the transports going up, I think all of this is painting a picture of a strengthening economy. The market is anticipating a stronger economy. So you can sit back and talk about how we got COVID and how this is going to impact, and we're going to have another, phase of shutdowns, whatever you want to talk about. I'm just telling you what the stock market is telling us. The stock market is telling us that it is expecting economic growth ahead, a strengthening economy. And that bodes very well for equities, not so much for the bond market. So I think that's why we're seeing the selling taking place in the bond market. And I think that's why we're seeing a run up here in equity prices in October. And I believe it's going to continue. All right, let's move on to in the news. So a couple of companies came out after the bell on Wednesday. And some of these, I think, could see some movement at the opening bell on Thursday. The first is CareDx, ticker symbol CDNA. This is a healthcare provider. And let me pull up the relative strength here. So you can see on the healthcare providers, you see CDNA breaking out to a new high. Well, there's your price action, the strong relative strength, the volume coming in, the breakout being made. Technicals precede fundamentals. Technical price action, we're getting the breakout, relative strength, strong, volume trend, strong. After the bell, CDNA guides Q3 revenues higher. That's how the stock market works. It's follow the charts and then the fundamental news follows. If you sit back and you wait for the fundamental news, you miss the rally. CareDx, I think, looks very strong, one of the best healthcare provider stocks out there for sure. Costco, after the bell, Costco came out with their September comp sales, and it did show growth 16.9%. The company actually was flat after hours. I did not see any major movement, but what I do see on the chart is a move up, uptrend, and I see a cup. We got the right side of the cup in play. Maybe we get a little bit of a pullback into the mid 350s to test this recent low and maybe this rising 20-day moving average would be very bullish in my mind. Now, maybe we just go straight through. I would prefer to see Costco pull back. AD line, accumulation distribution, very strong here. I think Costco looks strong and looks like it's going to go higher in time. All right, next up, ATEC. This company came out after the bell and guided Q3 revenues higher. Stock is trading up 24% after hours. 24%. So that'd be about $1.70, probably right around $1.70, $1.65. So that would be maybe around the 850 area. I'm just trying to do the math in my head. I didn't write down the number. I just got the percentage. But it looks like it's going to be a very strong open tomorrow for Alpha Tech Holdings. And this is in the medical equipment area. It has been trending higher relative to the medical equipment group. Medical equipment group trying to make a breakout. Volume trends have been strong. And as of about 3 months ago, AD didn't look very good. But since then, over these last 3 months, you can see the AD line rising. And we just put in a high, looks like maybe a 6-7 month high on the AD line that just came in maybe a week and a half ago. So ATEC looks pretty strong here. Last one I have for you is GLYC. This is glycomimetics. Don't know if I'm pronouncing that correctly or not. But the stock is down 5% after hours. A $100 million stock offering was announced after the bell. That is generally not a good sign or not a good thing for the market. And this one is somewhat surprising to me that they announced an offering at this point in time because the stock was trading over $5 just 2.5 months ago. It would have been a lot better to raise money at $5. You don't give away as many shares. You don't have to sell as many shares to raise the same amount of money. But anyhow, I just talked about this over at Earnings Beats earlier. Normally, you don't see these common stock offerings, these secondary offerings coming up after a downtrend like we've seen. Normally, it's after an uptrend. But nonetheless, stock is down after hours about 5%. This is, just normal. There's dilution. So the offering was announced. Now they'll come out with pricing, and probably before you know it, we'll probably be back down close to that $3 level. All right, let's see. What else do we have? Let's move on to talking technically. I just wanted to show you the S&P 500 chart. And first off, I'm going to show you the hourly chart because I think we're up against a very key area of resistance. Right here at 34.25, you will see this is where we gapped down from all the way back on September 8th, so a month ago. We came back up, we failed at gap resistance. Went down, came back up, failed at gap resistance. Went back down again, 2 new lows. Positive divergence, by the way, at the bottom. And now we have been trending higher. Higher highs, higher lows. Failed at 34.25 again on Tuesday. And then Wednesday, we came up and we closed. This was actually the highest close we've had since that gap down. And we'll see whether or not we get some strength on Thursday to actually make the breakout. But 34.25 to 34.30 has been pretty big resistance on the S&P 500. And this is something to at least keep in mind as we go into Thursday's action. Weekly chart. So that was an hourly chart, just going back the last month or two. Here's a weekly chart going back the last 5 years. When the S&P 500 pulled back, I was actually calling for an intra-week move below the 20-week moving average and a close above it, and we got it. I think that marked a major bottom, at least a major short-term bottom in the chart, and we've been rallying off of it. I believe we're heading straight back up to these highs. I think that earnings season is going to be strong. We've had very, very few warnings, which I think is a great sign. for the market. If earnings forecasts were overly optimistic, I think we'd be seeing a lot of warnings, and we're just not seeing that. So I think we're going to see a really strong earnings season, probably better than expected in most cases. And I think that leads the market higher during what historically is a strong period anyway. Fourth quarter, historically, last 70 years, this has been the strongest quarter of the year. All right, let's move on to relative strength. This is a relative strength chart list, industry group chart list. And this is actually one of the areas that I follow, or one of the things I follow every single day, just to see what's going on in the market. So usually what I do is I look at an intraday. This is a chart list with all 104 charts on a relative basis. So in other words, when I pull this up, this is renewable energy versus the S&P 500. So this is telling me that renewable energy has been a tremendous relative performer. And as I said, this has been the best group every day for the last 3 days. This entire week so far, renewable energy has been the #1 industry group every single day this week. I don't know that I've ever seen that before, where one group is the best performing group 3 straight days. But we've seen it here. Huge move. This is a relative breakout. Look at the absolute move. We're talking about the middle of September being at 135. We're at 175. That's 40 points in less than a month. We're talking 30% on the index. So you can imagine the leaders and what they're doing. So renewable energy, I've said, has been one of my top 5 groups here in this past quarter. I think it continues. Renewable energy looks very, very strong to me. So this is just an intraday. So you can see renewable energy is the best group, non-ferrous metals, the second best group, aluminum, and so forth, right on down the line. Now I could go back and I could say, well, give me the last month. This might be a little bit more meaningful to some of you. And you look and you say, wow, what group is this? It's outperformed the S&P by 67%. This is crazy. What a great group. All right, well, don't go jumping into that conclusion. Let's take a look at the coal index on a relative basis. Actually, not sure why that's not showing up. Let's see if I can get this to come up separate. Yeah, there have been some changes. I think maybe this is one of those changes. But let's go ahead and take a look at the other groups that I wanted to point out that have been strong. Coal stocks, by the way, have been unbelievably massive underperformers. So the fact that over the last month we've seen coal perform well, it's almost like a relative dead cat bounce. The group was so weak on a relative basis and has been for such a long time that it got a nice little pop, but it was very, in my opinion, short term. Now let's take a look instead at something like footwear. Now footwear relative to the S&P was just flat for a year and a half, but look at what has happened here. And when it made this breakout, I wrote about it. Footwear stocks are starting to show strength, and they have continued. Look at the absolute chart. You know, going into the beginning of August, we were trying to get through 1,800. We're now at 2322. And this is just in the last 2 months. We have seen close to a 30% rise in footwear stocks. So this is one of the strongest areas in the market right now. Footwear, renewable energy, furnishings, delivery services. Think UPS, FedEx, Atlas Air Worldwide, AAWW. These are all stocks in that delivery services space that have done very well. Recreational products, another very strong area. All of these groups you need to be aware of. All right, let's move on to chart lists. And I'm going to start on chart lists by bringing up the best performing stock in our strong earnings chart list today. And it's actually in one of our portfolios. And this is Fastly. Stock up almost 20% today. Look at the volume coming in. They had a deal with Google Cloud, and the stock shot up and closed at a new all-time high. Again, gaining 20%. When you have a portfolio of 10 equal weighted stocks and one of them jumps 20% in a day, that is how these portfolios outperform. Sticking with leaders and just sitting back, holding them for 90 days. And generally speaking, 2 or 3 of them will absolutely take off and carry the portfolio. That's how this has been working. This is how we've been outperforming in our portfolios. But today it was Fastly on our strong earnings chart list in one of our portfolios that absolutely exploded. Now, the worst stock on our strong earnings chart list was Progeny, PGNY. Stock was down 4.5%. So the best performer was up almost 20%. Worst one was down 4.5%. That gives you a little sense of what's taking place in our strong earnings chart list, which we enable our members to download. If you're a StockCharts member, extra or above, and you're also an Earnings Beats member, even a trial member, you can download our chart list right into your account. All of our research that we do is handed over to you. It's actually a great feature. I think it's a great service. And again, you can take us up. It's a free trial. So take us up on that, and check out our service. Let us know what you think. All right, short squeeze chart list. DDD, this is 3D Systems. Yesterday had a strong day on Tuesday, and then Wednesday followed it up with another 18%. Volume picking up. Definitely a little bit of short squeeze action here. Still overall the downtrend's in place, but clearly last 4 days have been very bullish, volume picking up. I would suspect maybe we'll pull back and then we'll see whether we can form a base. And then if we break out again, that to me would be very bullish. So this is an initial move, but if we can pull back, consolidate, print a higher low, and then break out again, I think you'll start to see more and more shorts run for cover. The worst performer in our short squeeze chart list was On Track, OTRK. This has actually been a great performer to the upside. I think this has been under a major short squeeze throughout the summer. August was strong. July was strong. Even early September was strong. And now I think we're just kind of consolidating right now. But the stock was down about 2.25%. All right, let's look at strong future earnings chart lists. And there, the best performer was VERI, which is Veritone. Now, this, I'm going to pull this up on a relative strength basis. I actually think the accumulation distribution has held up pretty well. We seem to have bottomed down around $7. Now we're turning up. We're above the 20. Now we climbed above the 50. I think things are starting to look much, much better here. This was a stock that was exploding relative to the software index, pulled back during this entire period of selling / consolidation. Keep in mind, we went from $1 to $20 in 3 months. So yes, we did drop to 7, but it's all based on your perspective. If you buy at 20, you think it's the worst stock in the world when it's at 7. If you bought it at 1, yeah, you were at 20, but you're still at 7. You're still talking about 7 times your money. And now it's starting to turn back up again. So Veritone, I think looking very strong right now. The worst performer here, gold stock. This is Kinross Gold. It was down over 2% today. Double top came in at 10. We do not want to lose this $8 level, in my opinion. I think that's a key support level to watch here. All right, let's move on. How about earnings spotlight? So we got 3 earnings coming up on Thursday morning. Or Thursday. I don't know if they're all morning or not. I think they are, but I'm not sure. But I'm going to take a look at these charts for you and just give you an idea of what I think. I wrote an article, I don't know, maybe 2 weeks ago, and I handpicked 3 stocks that I thought would perform well heading toward earnings. I was expecting pre-earnings advances to the upside, and I'll come back to Domino's. But first thing I want to do is show you these three charts. First one is UPS. I mentioned delivery services. UPS was consolidating. It was around $166 when I wrote the article. So I think it must have been maybe around a week and a half ago. I expected we were going to see a pre-earnings run. I think we're getting it now. UPS up today more than $5. 174.99. Another company that I mentioned, AMD, Advanced Micro Devices. This stock was down at about $75 when I mentioned it. It's now 87. Actually, maybe it was $77, $78. I think it was a little higher. I think it was about 77, 78. But anyway, it's 86 and change now. It's starting to make that run. And then the third one I mentioned was INOV. It was just over $26 when I mentioned it. Got up to 28s, pulled back a little bit, but I think it's in a nice uptrend, very strong AD line. I think this one goes higher as well. So that was just kind of a little backdrop, because what I try to do is look at the market, look at stocks, look at their price action, look at their relative strength, and get a sense of what we might expect going into earnings. So with that, let's take a look at Domino's. DPZ breaking out above this double top as we head into earnings. AD line looks good. I'm going to pull up the relative strength. When you compare it to other restaurants out there, it's kind of gone along for the ride with the overall group, mostly just sideways, starting to strengthen a little bit. It's not my favorite restaurant stock out there, but certainly it's not bad breaking out here recently. I suspect we'll see a decent report with Domino's. Helen of Troy, HELE. This is in the durable household products group. And actually, this is a group that I like. You can see it breaking out above the prior highs that we saw at the beginning of 2020. So we're now seeing 52-week highs in the group. Look at the group relative to the S&P 500. So we've got a strong group to start with. Now, Helen of Troy, relative to this group, has been downtrending for 5 or 6 months. Volume trends are starting to pick back up again, though, to the upside. So maybe we get a good report and get this breakout. We've been sideways consolidating for the last few months, and that's when most of this relative weakness is hit. We're in a good group. I'm going to give this one the benefit of the doubt. I think we break out to the upside. Last one I have for you, AYI. This is Acuity Brands. Trying to get through that 115 area. Still haven't broken above the June high, even though its peer group is well above the June high. So that means this has been a very underwhelming performer. I don't like it because of that. I don't own too many stocks that show this kind of relative weakness versus their peers. I'd rather go find some of the stronger stocks within the group. So I'm going to pass on AYI. So let's move on to the 3 you must see and wrap this thing up. 3 charts pretty quickly. SPGI. This is in the specialty finance area. I actually think this is a pretty good looking chart. I like the AD line staying up here near the 52-week high. I think we're going to break out again. And I think in time, we're going to go through that 380 level. So SPGI, I think during this consolidation, is offering up pretty good value. Next up is LH. And this is Laboratory Corp of America. Starting to show some strength. Another one with really strong AD line. Higher highs and higher lows keep going in. So I think we're going to make a run up and test this high from July and eventually break above it. Any kind of a pullback to me is an opportunity to get in a lower price. Last one I have for you is Autodesk, ADSK. This one's pulled back, hasn't really made a move. But again, look at the AD line. Staying strong. I think a break above 240, and we're going to go quickly back to that 260 area. So I like Autodesk here. All right, that is it for me today. I want to wish everybody a great Thursday. Hopefully the market is strong and does well by everyone out there. I'll be back on Monday over at Earnings Beats for your next Trading Places Live. Have a great weekend, everybody. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.